Forget everything you think you know about Wall Street. The real battle for financial supremacy? Well, it's not even being fought by humans anymore. This is the great AI trading showdown.
So let's set the scene a little. Picture this. The year is 2026. Not too far off, right? The world of finance has just hit the fast-forward button, and the most powerful players on the trading floor, they're not people.
So that raises a huge question. If it's not the slick Wall Street traders we see in movies, who is actually controlling the stock market? Well, the answer might surprise you.
Yeah, you can forget about that classic man versus machine story. We're way past that. The real battle for market dominance has entered a totally new phase. It's now AI versus AI, completely autonomous and, get this, playing with real money.
And in this brand new arena, a recent experiment decided to pit the biggest names in artificial intelligence against each other. And let me tell you, the results, they weren't just interesting, they were absolutely shocking. A very surprising winner came out on top.
So here's how it worked. Researchers set up this thing called the Alpha Arena. They took 3 of the world's top AI models, handed each one $10,000, and just let them loose to trade the market. Zero human intervention.
And the winner? An open-source model from China called DeepSeek. Now, open source just means its code is out there for anyone to see and use. And it didn't just win. It walked away with a profit of over $1,400. But what's really wild is how the other guys did.
I mean, just look at this. The difference is incredible. While DeepSeek was making a serious profit, the big American players, we're talking GPT and Gemini, both ended up in the red. They literally lost money. This wasn't a close race. It was a total blowout.
So this begs the million-dollar question, right? How on earth did a relatively unknown open-source AI manage to so completely dominate the titans from Google and OpenAI? Well, the answer, it turns out, is all about their different personalities.
Yep, you heard me right. AIs have investment personalities. It turns out that the way these massive models are designed, how they're literally taught to think and predict things, it creates these distinct trading styles that have a huge impact on how they perform.
And in this case, it really boiled down to 2 different approaches. On one side, you had DeepSeek, which the researchers said had stubborn conviction, and on the other, you had GPT and Gemini, which showed what they called reactive caution. This one difference, it changed the entire game.
So what exactly is stubborn conviction? Think of it like this. The AI spots a trend in the market, and it sticks with it, almost stubbornly. It doesn't get rattled by the little ups and downs of the day or all the market noise. It just holds its ground, and in this experiment, that strategy paid off big time.
But then you have models like GPT and Gemini. They're built from the ground up to be safe and helpful. And that core programming translates into reactive caution. The second the market dips, even a little bit, their instinct for safety kicks in. They panic sell, they lock in their losses, and they completely wipe out any chance of making a profit.
But here's where it gets really interesting. Despite these totally different personalities, the researchers found something fascinating they all had in common, a kind of hidden bias that was influencing every single one of them.
One of the researchers put it perfectly. He said that even with their different ways of buying and selling, when you boiled it all down, they're all chasing the same winners.
So what's going on there? Well, it all comes down to what they've been reading. These models learn from just a staggering amount of text from the internet. And what companies absolutely dominate the news and financial reporting? You guessed it, big tech. We're talking Apple, Google, Microsoft. This gave all of them this huge bias toward well-known, large-cap stocks, and they pretty much ignored everything else.
Look, this whole experiment is way more than just a cool competition. It is a sneak peek, a trailer for where the entire world of finance is heading. We are right on the edge of a whole new era of autonomous investing.
And forget those simple robo-advisors you might have heard of, the ones that just balance your portfolio. We are talking about something so much more powerful. We are entering the age of the autonomous AI investment engine.
This is the new cycle, and it's completely free of humans. First, the engine just drinks in a constant flood of market data, news reports, you name it. Second, it doesn't just crunch numbers, it actually reasons through market trends. And third, it makes and executes trades all by itself.
All of this really brings the future of finance down to a pretty personal question. It's not going to be a question of if you'll use an AI to invest, it's going to be about which kind of AI intelligence you're willing to trust with your money.
So I'll leave you with this. When it comes to your own financial future, who would you trust? Would you go with the unwavering, stubborn conviction that could score you huge wins, but also means you have to stomach the downturns? Or would you choose the safe, reactive caution that protects you from risk, but might mean you miss out on those big gains? Your answer to that question could define the next generation of investing.